Hi everyone. What separates investors who panic during crashes from those who come out richer? It's not luck, it's positioning. And right now, while markets trade near all-time highs, the smartest money on the planet is making moves that most people won't understand until it's too late. Warren Buffett's Berkshire Hathaway just reported a cash position of $348 billion, the largest cash pile any U.S. company has ever held. More than Apple, Amazon, Microsoft, and Google combined. Buffett has been a net seller of stocks for 12 consecutive quarters. Here's what nobody's telling you. Every crash in history created more millionaires than any bull market ever did. The 2008 financial crisis, the dot-com bubble, even the Great Depression. Fortunes were transferred from the unprepared to the position. The setup today looks eerily similar to past bubbles. But this time, you can see it coming. The signals are screaming. The Buffett Indicator sits around 220%. This measures total stock market value against GDP. Warren Buffett called it one of the best measures of market valuation. Above 120% means overvalued. We are at 220%, almost double. The last two times it hit this level, the dot-com crash and 2008 financial crisis, both times markets fell 30 to 50%. The Shiller CAPE Ratio measures stock prices against 10 years of earnings. It's at one of its highest levels in history, around 40. Only a few times has it been this high. Each time, major market drops followed. Meanwhile, corporate debt has exploded. Credit card late payments keep rising. Housing prices are higher now than before the 2008 crash. People take 7 to 8% mortgages for homes, more expensive than the previous bubble. Every warning light flashes red, yet stocks keep climbing, disconnected from reality. This always happens before crashes. Optimism blinds reason. This time is different, they say, but it never is. The Warren Buffett playbook. So what's Buffett doing with all that cash? He's waiting. He knows something simple that most investors forget. Cash isn't trash during crashes. It's ammunition. When markets fall, cash becomes power. It lets you buy great companies at discounts, assets that everyone else is forced to sell. Real opportunities that only appear when fear controls everything. But here's the critical part. You must position before the crash happens. That's where the Schwab U.S. Dividend Equity ETF ticker, SCHD, becomes your strategic weapon. This fund holds 103 high-quality dividend stocks, yielding 3.88%. Companies selected for fundamental strength, cash flow to total debt, return on equity, dividend yield, and 5-year dividend growth rate. SCHD isn't speculation, it's preparation. While growth stocks soar on hype and hope, SCHD owns businesses with actual profits, manageable debt loads, and proven ability to pay dividends through economic storms. Companies like Cisco, Amgen, and AbbVie. Real businesses generating real cash flow. Here's what makes this positioning powerful. SCHD has defensive sector allocation. 19% consumer defensive, 20% energy, 16% healthcare. These sectors historically outperformed when growth slows and markets correct. While tech-heavy portfolios get crushed, dividend payers become safe harbors. In 2022, when the markets fell, SCHD declined only 3.3%, while Nasdaq dropped 33%. That's the difference between protection and devastation, between staying in the game and being forced to sell at the bottom. The 3-stage plan. Stage 1, build your position now. Allocate 30 to 50% to SCHD immediately. This isn't timing, it's risk management. You collect nearly 4% yield either way. If markets climb, you participate defensively. If markets crash, you own quality at discounts. For aggressive positioning, 60% SCHD with 40% individual defensive stocks. Advanced investors, 70% SCHD, 20% treasuries, 10% cash. Stage 2, dollar cost average. Set up automatic monthly purchases, $800 to $1,000 monthly. This removes emotion. You buy at various price points, capturing weakness as it appears. Stage 3, rebalance strategically. Start with 20% SCHD. If markets rally, sell winners and add to SCHD. If markets correct, increase to 50%. Buy low, sell high. Why this works in every scenario. The beauty of SCHD positioning is that you win regardless of what happens. If the economy continues growing, you collect nearly 4% annual dividends while maintaining equity exposure. Your dividend grows 10.4% annually, doubling your income every 7 years through dividend increases alone. If economic growth slows but avoids recession, dividend payers historically outperform as investors rotate towards safety and income. Quality becomes premium. Speculation gets punished. SCHD's portfolio of profitability, dividend-growing companies attracts capital-fleeing risk. If recession strikes, you own businesses with strong balance sheets that can maintain dividends through downturns. While growth stocks crater on fear and uncertainty, dividend champions provide stability and income. You're buying most shares with reinvested dividends as prices fall. This isn't about predicting the unpredictable. It's about positioning for multiple outcomes. It's about being ready when opportunity strikes while everyone else panics. The historical blueprint. Every major crash follows the same pattern. 2008, Buffett invested billions in American Express and Goldman Sachs at peak panic. Within years, billions in profits. Not because he knew the future, but because he knew great assets always recover. 2000 tech crash. Quality dividend payers survived while dot-com speculators lost everything. Even the Great Depression rewarded the positioned. Real earnings, real assets, sustainable dividends. Speculators wiped out, investors rich. Fear controls everything during crashes. Friends tell you to sell. Headlines scream collapse. Portfolios bleed red. Yet that's when wealth transfers from the impatient to the prepared. The opportunity window. Imagine the next market crash. Stocks fall 30 to 40%. The bubble deflates. Headlines scream doom. But underneath the panic are bargains. Quality companies at fire sale prices. SCHD yielding 5 to 6%. Dividend aristocrats at 10-year lows. Those who position now, who built SCHD holdings while markets were high, will look back on this as the wealth transfer of their lifetime. Not luck, preparation. What you must do now. First, understand the facts. Buffett Indicator around 220%. CAPE Ratio around 40. Berkshire's $348 billion in cash. These are warning signals. Second, take action. Purchase your initial SCHD position. Even 30% allocation makes massive difference. Set up automatic monthly investments. Make decisions now before emotion takes over. Third, master your mindset. Fear is contagious. Your brain screams to sell, but wealthy investors do the opposite. They feel fear. They just don't act on it. They follow logic, not emotion. Market crashes are emotional hurricanes. Weak hands get blown away. Strong hands build foundations. The next market crash will be a wealth transfer, from the greedy to the patient, from speculators to strategists, from those chasing yesterday's winners to those positioning for tomorrow's opportunities. SCHD gives you the tools: 3.88% yield, 103 quality dividend stocks, defensive positioning, 0.06% expense ratio, proven track record. You don't need billions. You need positioning. You need a plan. You need to act while others hesitate. When the dust settles, two groups emerge: those who panicked and lost, those who prepared and captured opportunity, those who understood chaos creates value. The choice is yours. Preparation is wealth. Panic is poverty. Discipline starts now. Build your SCHD position. Keep powder dry. Watch patiently. Act decisively when the storm hits. While everyone else cries about losses, you'll quietly build your fortune. That's how you use market crashes to get rich. Through preparation, through patience, and courage when others have none. Remember, this isn't financial advice. I'm not your advisor. This is educational only. Your decisions depend on your situation, risk tolerance, and goals. If you found this valuable, subscribe so you don't miss future insights on protecting and growing wealth in any market environment. Smash that like button, share with someone who needs this, and subscribe for real market insights. Here's to building wealth through preparation and smart positioning. Profitable investing.